Welcome to today's Explainer. Listen, August 2026 is shaping up to be an absolutely defining moment in the crypto markets. If you've been looking for the 10 best cryptos to invest in right now, you are in exactly the right place. But before we unlock this entire investor's playbook, do me a huge favor and take just a quick second to hit that like button, subscribe to the channel, and leave a comment down below. Seriously, it really helps us keep bringing you these deep dive explainers. Okay, let's dive right into this. Today, we are breaking down the critical macro events that are completely reshaping the market right now, and we're exploring the top assets you absolutely need on your radar for August 2026.
Look at this number, 105 million%. I mean, let that sink in for a second. That right there is Bitcoin's staggering historical growth from a roughly 6-cent price tag way back in July 2010 to over $65,000 as of early August 2026. This monumental trajectory is a massive reminder of the unprecedented stakes in this market. We aren't just talking about incremental traditional stock market gains here, we are talking about literal paradigm-shifting wealth generation. But here's the catch. The crypto landscape in 2026 is vastly more complex than it was a decade ago. Capturing those kinds of gains today requires a very, very precise understanding of the current market structure. It's like a giant puzzle, and you need to see all the pieces.
So before we just rattle off the Forbes top 10 assets, we really need to understand exactly why August 2026 is such a critical, narrow window for investors. As analysts over at Kraken and IBIT note, this market is no longer purely driven by those euphoric, wild Bitcoin cycles we used to see. It's become highly structural. It's being shaped by overlapping Federal Reserve policy windows, major tech earnings, and massive legislative votes. Basically, if you don't understand the environment we're operating in, you simply won't understand the asset valuations.
Moving to Section 1, the setup, August 2026 macro catalysts.
August really moves to a very specific, high-stakes rhythm. It kicks off right away on August 4th with SpaceX earnings. Now, you might be wondering, why does a space company matter for crypto? Well, because strong SpaceX results and Starlink cash flow act as massive catalysts for the DePIN sector. That stands for Decentralized Physical Infrastructure Networks. Next, we enter this critical Senate window for the Clarity Act, which is a landmark bill clarifying exactly where the SEC and CFTC regulatory boundaries lie. Finally, late in the month, global central bank chiefs gather at the Jackson Hole Symposium. A dovish tone here from the Federal Reserve, meaning they signal a willingness to lower interest rates, could inject exactly the kind of liquidity needed for a massive autumn rally.
The IBIT playbook provides a crystal-clear trading mantra for the month, and it goes like this. Bet on legislative unlock early, watch the Fed's autumn roadmap late. So what does this actually mean for you? It means you want to be accumulating compliant Layer 1 blockchains. These are the foundational networks, the digital highways that other crypto apps are built on. You want to accumulate them ahead of the Clarity Act vote. But you also have to stay defensive. If oil prices start rising due to Middle East tensions, it could spark secondary inflation. That would delay Fed rate cuts and put a ton of downward pressure on risk asset valuations. It is a delicate balancing act for sure.
Section 2. The roster. Tier 1. The Titans. Bitcoin and Ethereum. So let's look at the actual assets. Bitcoin remains the absolute dominant force here, sitting above a $1.3 trillion market cap. It's firmly maintaining its role as digital gold and a macro inflation hedge. Meanwhile, Ethereum commands a massive $380 billion footprint. Ethereum is literally the backbone of decentralized finance and smart contracts, which are essentially self-executing lines of code that power the entire Web3 ecosystem. For any heavy-hitting portfolio exceeding $5 billion in institutional adoption, these two assets are the absolute bedrock. You just can't ignore them.
But listen, even the Titans face severe volatility. Ethereum is currently sitting at a critical crossroads. TradingView's analysis details a very potent bull scenario where Ethereum completely shatters the $4,000 barrier. And that's driven by relentless ETF inflows, traditional finance money pouring in, alongside its deflationary token supply, meaning they are actively burning tokens to make them more scarce. However, if that macro liquidity dries up, or if the Fed insists on keeping rates higher for longer, the bear scenario could see Ethereum plummet all the way down to $1,743, violently retesting its early 2026 lows. This dynamic is exactly why paying close attention to inflation data and Jackson Hole is absolutely vital.
Let's move to Section 3, the roster. Tier 2, the ecosystem leaders. We're looking at BNB, SOL, and TRX. Now we're getting into the massive ecosystems. BNB, sitting at nearly $71 billion, is deeply integrated with the Binance Exchange ecosystem, and it heavily benefits from quarterly coin burns that structurally reduce its overall supply.
Then you've got Solana, sitting at $66 billion. It is completely beloved by traders for its incredibly high-speed, low-cost decentralized finance operations. And that's even despite it having to navigate some occasional network stability concerns. And then there's Tron, boasting a $31 billion cap, which thrives on its super energy-efficient proof-of-stake consensus model. That makes it a go-to network for cheap smart contract execution on a global scale.
Now, the really crucial point to grasp here is how these Tier 2 ecosystem leaders interact with that macro timeline we talked about earlier. Tokens like Solana and Cardano have long had to operate under this heavy, dark cloud of being labeled unregistered securities by regulators. But the IBIT report points out something fascinating. A successful Senate vote on the Clarity Act effectively provides a compliance amnesty. Think about what that means. If that regulatory shadow is finally lifted, these Tier 2 assets could see a historic, explosive valuation reset because institutional capital will finally feel legally safe enough to enter the arena in a massive way. Section 4. The roster. Tier 3. Niche innovators and legacy plays.
Let's look at some really interesting targeted plays. First is Hyperliquid, or the HYPE token. In traditional finance, derivatives and futures contracts are largely traded on these massive, centralized exchanges. While Hyperliquid brings this entire concept entirely on-chain, offering lightning-fast execution without sacrificing true decentralization. Currently sitting at a $14.9 billion market cap, it acts as a total magnet for pro-traders in the DeFi space. Though, to be fair, you have to keep in mind that it inherently carries regulatory risks because it's dealing with derivatives trading.
Next up, we have Rain. This one is a fascinating play on prediction markets. In case you aren't familiar, prediction markets allow users to essentially bet on the outcome of future real-world events, like political elections or major sports. Rain is a decentralized infrastructure token that is specifically positioning itself right now to capture the massive influx of liquidity expected around the FIFA 2026 World Cup. It's sitting as a $9 billion token right now, but a quick word of warning. It's important to note this remains highly speculative and is still in the very early stages of real-world product adoption. So tread carefully, but keep it on your radar.
Rounding out our top 10 are the legacy innovators. You've got XRP sitting strong at $64 billion, which was designed by Ripple to act as a seamless bridge currency for instant, low-cost, cross-border payments all over the world. Then there's UnisSED Leo, which is a deflationary token heavily reliant on the iFinex ecosystem. And finally, Zcash. Now, Zcash is super interesting because it recently surged over 11% thanks entirely to its incredible privacy tech. It uses something called zero-knowledge proofs. It's a brilliant cryptographic method created by MIT scientists that basically allows transactions to be verified on the blockchain without ever actually revealing the sender, the receiver, or the transaction amount. Total privacy, but fully verifiable.
Moving into our final section, Section 5, the defense, securing your crypto assets.
Seriously, what good is meticulously building an amazing portfolio from our top 10 list if it vanishes overnight? That is the million-dollar question. Because, as the research from AltFins clearly shows time and time again, exchanges get hacked, lending platforms collapse, and smart contracts get exploited. If you leave your crypto sitting on an exchange, you don't actually own it. The exchange owns it. The absolute only way to guarantee your assets are safe, regardless of what chaos happens to third parties, is through self-custody.
When it comes to self-custody, you basically have two main paths. You have hot wallets like MetaMask, which are connected to the internet. These are perfect for daily, active trading and effortlessly interacting with Web3 apps. But because they are constantly online, that internet connection brings severe vulnerabilities to phishing scams and malicious malware. Cold wallets, on the other hand, are physical, offline devices. They store your private keys completely disconnected from the web. The AltFins rule of thumb here is incredibly simple. For your daily trading, sure, use a hot wallet. But for any holdings over $1,000, you absolutely must be using an offline cold wallet. It is non-negotiable.
Now, if you are going cold, you generally have two top-tier choices to pick from. Ledger is the world's most popular hardware wallet, and it supports over 5,500 different assets. Its main draw is that it's fortified with a certified secure element chip. We are literally talking about the exact same offline, military-grade technology that is used to secure modern biometric passports and high-end credit cards. Trezor, on the other hand, supports fewer assets, but it is the undisputed gold standard for transparency. Launched by Satoshi Labs all the way back in 2014, Trezor's firmware is 100% open source. That means the entire global security community can and does audit the code to ensure there are absolutely no hidden backdoors whatsoever. But no matter which device you choose, the ultimate golden rule of crypto storage completely comes down to one thing: your seed phrase. Whether you use a ledger or a Trezor, the device will generate a 12 or 24-word recovery phrase for you. This phrase is the absolute master key to your wealth on the blockchain. The whole shebang. If you accidentally lose the physical device, don't panic. You can effortlessly recover everything on a new device using this phrase. But if someone else gets their hands on this phrase, they can steal everything you own in seconds. You must write it down on physical paper or engrave it on a metal plate. Never type it into a smartphone, never save it to your cloud storage, and whatever you do, never take a photo of it. Keep it strictly in the physical world.
So as we wrap this up, remember, with massive legislative catalysts colliding with high-stakes tech earnings and pivotal Federal Reserve policy shifts, August 2026 is just not a month to be passively sitting on the sidelines. Take a hard, honest look at your roster of assets. Are you positioned in those compliant layer 1s? Are you tracking the deep pin narrative we talked about? And most importantly, review your storage methods right now. Ask yourself if you are truly prepared, both defensively and offensively, for what this month brings. Thank you so much for joining me for this explainer. If you found this breakdown valuable, please hit that like button, subscribe to the channel, and leave a comment letting me know which of these top 10 cryptos you're watching the closest right now. I'll leave you with this final thought. The wealth of the next decade is being built right now in 2026. Will you be holding the keys when the tide comes in? See you next time.